Welcome to today's video tutorial where we're going to show you how to use limit orders in order to place a buy order on an uptrending Forex pair. Now, it's currently August 2018 and at this point in time we've got the Aussie dollar and the Euro dollar. Now, the US dollar has been on a fairly significant rise, which has been really strong. So on the daily, you can see the pound has been getting absolutely smashed and the euro has been smashed and the Aussie dollar has been heading pretty south consistently as well. So in this example, I'm actually going to pop across to the hourly chart, because in the hourly chart, you'll notice that the US dollar has weakened and all these currencies are now starting to gain some strength against the US dollar. So it's a good opportunity on an hourly time frame to consider using a short-term trade where we're actually going to buy weakness. We're going to look to place a limit order below the market and get set to trade long. So why don't we pop across to the Aussie dollar? It's currently the Aussie market session. It's the afternoon session for the Aussie dollar, heading into the Asian market close and then heading into Europe in a couple of hours, the European Open over in London. All right, so at the moment, I've got a 100 period moving average on and it's currently rising. So that meets our criteria as far as wanting to trade in the direction of the trend. And this is the hourly trend that we're on, so that's okay. So what we're going to do is we're going to do two things. You'll notice that I've got an ATR on here. So the ATR is good because it lets us know how much the market is moving on average per hour. So at the moment, it's moving 0.0010, which is 10 pips on average per hour. So let's get a few things on here to give us a bit of an indication of where we might want to get set here. So it's bumping along there and it's currently in the overbought region. Okay, so we're looking to maybe buy it off the trendline support. There does seem to be a bit of price action around the 7335 region here, which we could get set at. So as it comes down, it might be meeting just through there, and there's a bit of price action there, which is interesting to see. So what we might do, we actually might use that, and well, it's moving at 10 pips, so we're at 58 there, that's 35, so that's about, what do we got, 23 pips away. So that'll be 2 ATR away. So an average daily movement or average ATR there. So it's a good chance of getting hit as it moves 10 pips. So we're going to place ours about 30 pips away from the current price action. So if it were to pop back down, so yeah, let's try and get set at 7330. Okay, so in order to do that on MT4, we right click anywhere on the chart and we can actually place a buy limit there. So, but what we'll do, we'll actually go through to place a new order. We'll go through the whole process here. Let me bring it across onto our screen. Now, let's just, for the example, we'll just get set on 0.05. And what we're going to do is from market execution, we'll pop down to pending order. It's already set on buy limit there, so we have a few other opportunities there. So we're actually going to try and buy weakness as it pops down. Okay, so in this case, we said we're going to buy at 330. Okay, so yeah, that's about 30 pips, 30 pips away from the current price action. So this is how we place a limit order. It's pretty straightforward. So we're going to buy 5.05 and it's a pending order, it's a buy limit, and we've put our price in at 0.7730, so 5 pips below that price there. Everything's good. You can set an expiry date if you wanted to. We're not going to. We're just going to get set at that price if it does in fact fall down, and we'll click place. Now that'll appear on the chart just through here, as you can see. So sometimes what you might want to consider when you're buying weakness is the fact that it can overshoot. You'll notice just through here, there's a lot of wicks. The lower part of the candle has popped well and truly down through the trend line, although that was set from this level here going through there. But occasionally what can happen is you can get what they call maybe a bargain, a little bit lower than what you might expect, and the price overshoots to the downside. Very common thing to happen in the Forex markets. So if you're not too concerned about making sure you do get set, you could place it a little bit lower in the hope that it just spikes down a lot further and you get set at that level and then it starts to rebound. That would be the best case scenario. So that's how you place a limit to buying weakness in an uptrend. Okay, short-term weakness in an overall uptrend. We're on the hourly chart, so you need to consider that, take that into account. You can apply it on the daily chart as well. If it were in an uptrend, that would be ideal, and you would also look to buy that weakness as well. Certainly saves you, in this case, having to wait for the stochastic to come down to oversold and then get the trigger and the signal through there, wait for it, and then place maybe a market order. In this case, we're just suggesting that it might have the opportunity to come down. It could power along, and we missed the trade completely. But in this case, we've put it a couple of ATR away, two and a bit, just over 2 ATR away from the current market action, and we're going to buy that weakness if it does get down there, and then we can set our stops and price targets accordingly. So hopefully you found this tutorial helpful. If so, please give it a thumbs up, and we look forward to you subscribing to the channel, and all the best with your trading. Thank you.